Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, December 28th, 2009. Well, last trading week of the year 2009 as we approach 2010, and 2010 promises to be a wild trading year following the last 2 years. Couple things to go over today. The markets are flat to slightly higher, which is following in tune with what we talk about being a holiday week, up until the new year. You have light volume. Today the volume is only 33 million on the SPY. That is on pace for the lightest trading day of the year. With that, you expect the markets to be neutral to slightly higher. That is exactly what's happening. We have the Dow up 13 points, NASDAQ up 5 points, S&P up about 1 point on the day. So you can see just slightly positive, just barely holding on to the positive side. Now, we did have a gap higher this morning across the board. Now, you can see on the SPY chart here, you see this gap up right at this point. From that point, what happened was we started to fade, and this was a beautiful little fade coming in, and the market faded all the way down to the high pivots from Thursday's trading activity. If you remember, Thursday was a half day closing at 1 p.m. Eastern time. Friday was the Christmas holiday, so the markets were closed as well. So this is Thursday, but look at how beautiful this is. I called out a long play in the chat room right there for a small gain, and you can see that's exactly the play of the day, really the only play off of any support lines today. Right there was your buy print. Right there, notice the 20 moving average sloping up into current price. Also the blue trend line, which mirrors the highs of the day from last Thursday. With that, you can see you go long, just float up gently. Very low risk trade there based on the light volume. In general, in light volume environments, you want to be looking for short-term plays on the long side because they'll work out more likely than the short side. All right, so again, if I saw a bearish pattern or a bear flag and also a bull flag, which one would I choose? Generally, you're going to choose the bull flag in light volume trading or pre-holiday trading. Now, again, what you're seeing here, folks, is that general sideways action. The Dow is, again, just up 13 points. The SPY right here is trading just up 20 cents on the day. So about as light of trading day as you can get, as sideways of a trading day. But that doesn't mean you're not setting up for some big stuff, folks. And I announced this over the weekend and last week, but we will be featuring 2 stocks on the Hidden Gems report in January to kickstart this year. I want to get 2010 off to a big holiday bonus start with some big profits. And again, those of you that played the Hidden Gems last year, from January through December, the average return on the Hidden Gems from their mention price or the alert price from the Hidden Gems to the highs of 2009, 129%. That's your average return across the board. That is unbelievable, folks, and I look to have as equal to or better a year next year with the Hidden Gems, and we're going to be featuring 2 in January, so be ready. Join the Research Center. It's included in the Research Center along with everything else listed under the Research Center, so you want to be on board with that. Plus, a bunch of new things coming out, folks. We're going to be giving a lot of key projections going into the new year about what to expect in that first month of January. We're into some master levels that you need to be involved with and understand going into this last week of the year to set yourselves up for that move in January that is expected. So be ready, find out what the move is going to be, which direction, where's it going to go, what are you going to do to utilize it and take advantage of it. Now, again, here's the fade on the markets as you came right down into that blue trend line. You're in spirit of bear pattern. And remember what I talked about just before. See how you had a nice move down here, guys? Right here, and then you went into a bear flag pattern. Notice how the bear flag pattern barely plays out because the volume's too light. This line right here, this lower flat blue line, is too strong based on the light volume to pierce it, and that's exactly why when I talk about that, we talk about whether or not to take a bear flag pattern to play to the short side or not. In general, you want to be aware that in the lighter environment, you have to be very cautious there. So this is a good example of what I'm talking about. You see a little bit of a fade here, but it can't break the lows. Ultimately, if we had full volume in this market, you'd see this flush down probably to the 50 moving average, and there'd be your next scalp of the day for a beautiful bounce and so forth. But right now you can see it came right down to that point, and from that point just went sideways and floating up now. Believe it or not, you're making a slightly bullish pattern now, micro bullish pattern right here. You see this little bit of an uptick right here and then 1, 2 inside bars. That actually tells us that you could make a little bit of an attempt to go back up, maybe to this high level, or maybe a little bit higher in the afternoon session. Again, as long as the light volume is still in this market like we're seeing right now, you want to have a neutral to positive bias across the board for the remainder of the week. As I said in the weekend video, for those of you that caught that, I do expect a little bit of 1 day down across the board, 1 day this week, but other than that, that's about all I expect, and that kind of looks to be the case. You're going to see flat to slightly up market for the most part, maybe with 1 down day across the board, 1 small down day, 25, 50-point drop on the Dow. That's essentially what I'm looking for this week. But again, you don't necessarily want to play it because the volume is just not worthwhile. Okay? Now, a couple other things to cover. First of all, I highlighted a couple stocks here. I put out an article on the Rant and Rave blog, folks. It got picked up on Google Finance, and it's out there for everyone to see. But I talked a little bit about U.S. Steel. I think U.S. Steel is in a topping phase here. You want to be watchful of this. Look at the daily chart, and look at this candle. Very bearish candle. This tells me there's a possibility this could come in even more. We put out the article when it was trading near the highs of the day. It has now gone flat on the day, and I do believe that this will continue to fall down back towards the 20 moving average. You're looking for probably a 10% correction in January from this current price across the board. And there's a couple others mentioned in that article as well that I think could be very key in looking for that type of reversal play. So keep an eye on that on U.S. Steel, folks, along with even Alcoa. I mean, take a look at Alcoa, down on the day now after gapping up. And even on the daily, that's beginning to look a little bearish, like it needs a little bit of correction. So these metal stocks are very, very extended. You can see other stocks like CENX, ridiculously extended, also on the watch list for a correction there of at least 10% or move back towards that 20 moving average. As it will inch up, so will the 20 moving average inch down as well. Excuse me, price will inch down as the 20 slopes up into current price. All right, so those are just a little example of different stocks to be watching here. Also, you can take a look at Apple. Apple, interestingly enough, looking a little extended here. It got an upgrade today by Weasel across the board here. Now, I think that Apple is probably getting to the extension point where it's going to top out here. From what I'm seeing on the technical calculations, it's getting to that point. It's right in that miss. Really, 210 is right around that level. It's right at 212.50 right now. I wouldn't be surprised if you see some pullbacks later this week or in early January to the 200 level on Apple computers. So keep an eye on that, folks, just because you're near-term extended. Now, that doesn't tell us what's going to happen in January necessarily, other than a small pullback, but it's very likely that you will see that type of activity across the board in some of these stocks. All right, let's take a look at Amazon. Amazon's up about $2 today. Now, the key on Amazon, folks, and I highlighted this last week, look at this trend line. Look at that. Still right up into that. See this high, then the high, and the high. It's having a lot of trouble getting through this trend line, and it's also approaching a double top level right up here. So you have to be looking at a lot of resistance coming into play on Amazon on the daily chart that you should be watching very closely. And again, as we get into the end of the year, you want to know what you're going to look for here. How do you know if it breaks out? How do you know if it stalls? How do you know to go short? How do you know to go long? All that kind of stuff is covered in the Research Center, folks. And again, I strongly encourage you to get on board with that Research Center. You get everything. The hidden gems, which are, again, 2 in January. You get the daily market reports, the nightly videos I do personally, which is 40 minutes in length approximately, of hardcore technicals on everything from stocks to commodities to the dollar. You name it, it's all covered in there. We'll cover key levels, master trend lines, you name it, it's covered. In addition, technical tactics. You get everything listed under that Research Center for just $49.99 a month. It's probably the best value. Again, just think about this, 129% return average for the hidden gems. Just buy 1,000 shares of any of those hidden gems, which are like $2 stocks most of the time, maybe $3 stocks, and think about the type of money you're making just on a $2,000 investment based on 100+ % return. Ridiculous. Pay for the year in one hidden gems just alone, let alone all the other calls that are made in the Research Center. Unbelievable stuff. In any case, folks, we look forward to having you with us in the new year. We suggest that you sign up this week because you need to be acclimated to the market and what we're saying before you jump in January and look for that move that we're going to be talking about. I do suggest that because too many people try to get in right at January. They have no clue what the internals of the market are or how to really react, and it's just like throwing a lobster into a hot boiling pot of water. It's not going to, what are you going to do there? It's not, you can't swim out of that. There's nothing you're going to be able to do. So I do recommend that. And again, we'll look forward to seeing you in later this week and next week with the beginning of 2010. Happy holidays, folks. We'll talk to you soon. Take care.